Welcome to this new episode of your next trade call. Today just closed the beep tech short. So on Thursday we get the Fed Powell advising people if they don't want people to be entering the room just to close the door. So now I have a very good advice to you. If you don't want to be losing too much money being short, you should be closing your fucking tech short. And I'm not talking about closing the overall the overall short if you have one. But as we're going to see today, the pain is mostly coming from being short tech. So here we got a chart of the QQQ, which is the Nasdaq 100 ETF, which has been up 10% from Thursday a couple of weeks ago to the close as of yesterday, Friday. So 10%, that gives you 1,000 return over a year. So that tells you about the strength, the short squeeze that we have over the last couple of weeks. And as we're going to see today, particularly for this week, the strength has been mostly back to the names that we had in the past, which was explained by the 0 days to expiry, by the fabulous 7, by the squeeze that we had most of the time on Fridays because of the weekly expiration. So let's start as always with the week-to-date asset performances, where we got in blue the different stocks indexes. So we can see here the S&P up 1.3, the Nasdaq 2.4, but you can see the difference between the 1.3 of the S&P and the minus 3% from the Russell. So it's not like all the market is going up. It's very much the same picture at what we had before, which is market is driven by very few names, the tech leaders, and that is driven the market higher. If we look at the currencies, a bit of a weakening of the US dollar. So we have been trading around the 1.065, 1.07 versus the US dollar. Why? When we have a risk on, most of the time, what is happening is the weakening of the US dollar. Crypto doing still very strong. There are more and more confirmation that we should see in the next couple of months some ETFs around crypto, and that has been helping the crypto and Bitcoin to be above 35,000. Gold risk on means, gold going high, lower. WTI now trading below 80. And as I've been saying last week, I didn't have that much of a view. I didn't want to take any position, but the weakening has been confirmed, and same with the copper. So if you think about, the strength of the world economy through the WTI and copper, that is not really the big picture. So this one is really interesting. Why? Because that gives you the picture for the week. So let's start with the S&P. So you get the S&P that is here, and then you get very few winners. And the winners, who are they? Cybersecurity, cloud, Nasdaq 100, technology. So again, same winners take all. And if you look at the other end of the spectrum, looking at the Russell, so Russell will be here. Russell is down for the week. So overall, many sectors, industries underperforming the S&P. So again, if you've been short the market, it has been mostly, the pain has been mostly coming by very few names. If you look at the performance of the S&P over the last couple of weeks, where we had roughly 7 to 8% from the lows a couple of weeks ago, actually 50% more has been coming of this performance has been coming from the fabulous 7. If you add a few names, you're going to have roughly 70% that are in the hands of those very few sectors, or should I say industries. So very much same as before, where the pain to hedge yourself has been pretty hard, because if you go short the overall indexes, actually those names are driven the indexes higher, because a lot of the weightings of those indexes are being done on very few names. So on the sector's performance, looking on the week to date, so that would be here. As you can see, IT, technology is taking everything. Energy, you get obviously the strong correlation with WTI, but for the week, so first week, that was the week before, we had an overall squeeze on the market that went from all the the most short interested stocks to the Russell 2000. But for this week, actually, Russell down 3%. Short interest stocks were not squeezed that much, but it's mostly about back to the names, the Microsoft, which has been making new highs, the Apple, all those big names, the fabulous -7. What about the rates? So starting with the US 10 years, we are now at 450, 65%. So we are small up on the week in terms of yields. We had a bad auction. So what I've been saying last week, if you look at the catalyst, if you rewatch the previous episode, I've been flagging any auction, bond auction is very important. So on Thursday, we had a bad auction with the tail that was higher than usual. Some people have been saying this is about China. It's very funny when people are blaming China. It's not too much about, you know, an IT glitch somewhere. It's mostly because, you know, as the treasury is putting too much supply and the demand was not that strong, specifically as we went from 490 on the 10 years to 450, you should be expecting, you know, the supply not necessarily being meeting, or the demand not meeting this big supply. So not much of a surprise here. The 2 versus the 10 at minus 40 bips. Now looking at the Fed expectations to the Fed fund rates. So blue will be the last. The red will be from a week ago. As we can see, we went higher. So if we take the example of June, which is here, the last is at 519 versus 504. So a bit more of hawkish Fed going forward expectations, and that is true along the yield curve. So that is true from the short to the long, where market participants are expected, at least for the week, a bit more hawkish. What about the VIX? So the VIX, we are really back to the market where we are getting closer to option expiry. As we've been saying a month ago, one of the ways for people to hedge themselves has not been bonds, because bonds have been coming down. So they have been bidding gold and they have been bidding VIX futures. So VIX futures were, in that sense, not over demanded, which created the VIX futures to go above the 20%. Now we are at 14%. So if you think about on the S&P, we are roughly back to the level of 50 bips, 1% level that we had a month ago. But in the meantime, the VIX went from 16% to 14%. So we had a smash of the volatility. When there is smash of volatility, everything goes up, or at least the stocks, should I say. But still, you know, the VIX term structure, there are still some hedging going forward. So it's going to be interesting to watch one thing, which is we could see the market going higher in the next 6 weeks, and in the meantime having the VIX, the implied volatility going higher. Why? Because, you know, people will be bidding more for the tails, so that's something to be watching. I'm going to be starting with Bloomberg, looking at the S&P futures. As you can see, something that I flagged, this is the 4,400 was a very important level. We broke it on Friday on the 0 day to expiry, on the weekly expiration, and clearly, you know, we started the day at 43.60, ended up at 44.30. So strong day. So now if we go back into trading view, looking at the Nasdaq, same picture. So a lot of breaking higher, not for the Russell. So the dodgy indexes, or the underperformers, are still going to be underperforming, or have been underperforming, should I say. If you look at this one, this is a very interesting one, looking at the Nasdaq versus the Russell. As you can see, Nasdaq is making new highs. So 5 days, 1, 2, 3, 4, 5, strong week for the Nasdaq versus the Russell. So we are back into the story where the Nasdaq 100, where you buy those names, those NVIDIA of this world. So NVIDIA is up 20% from the recent lows, 400 to 483, like in no time. It is one of the drivers that will be looking, because we're going to have the earnings soon. What about CL1? As I said, CL1 picture was not great. I didn't have, you know, any position, but still same with the copper. Copper weak on over the last 5 sessions. Gold, when you get a risk on, we reached the 2000, and over the week we have been down 4 to 5%. Euro dollar trading sideways, not much of a view. this one is a one to monitor, because despite the talk of the Bank of Japan tweaking a bit their policy, we are getting closer to the 150, 180, 152 of the recent highs that we had on the dollar yen. So that's something that we should be watching. I guess the Bank of Japan is watching as well. I want to switch now into what was the weekend and what happened. So as we've been saying over and over, it has been mostly about the correlation between the S&P futures and the US 10 years. What has been interesting is, as of Thursday, which is here, you had a strong correlation. But on Friday, we had a decorrelation between the two, where suddenly the S&P futures, the stocks, the Nasdaq, everything went through the roof, whereas yields stayed the same at 4.65% on the 10 years. So what does it tell you? Is it the start of a decorrelation that we had over the last 3 weeks, when each time bonds were sold off, stocks were sold off? That might be a start of a change. Not like the market doesn't care about bonds anymore, but to a certain extent, it has been priced of the central banks being higher for longer. So very interesting this Friday. If you look at what has been happening, we had a very strong market. So 8 days in a row where the S&P was up, VIX was down for 8 or 9 days in a row. What happens most of the time, and this is coming from this source here, afterwards you tend to have the market trending higher. Okay, so I'm not saying that as always, this is something that you should do, but based on past we had this kind of move where the S&P goes up 2, 3, 4% in a row. So we had the VIX down, stocks up. We get a bit of a start of a decorrelation between the two, but really it has been about, tech to the moon, 0 days to expiry, weekly expiry, and driven by the FANG. Okay, so if we look at this chart, which is here, as you can see, at the bottom you're gonna have the S&P and the Nasdaq, but all the names, we are talking Microsoft, we are talking Apple, we are talking Amazon, we are talking Google, Nvidia, have been outperforming the market and driven the market higher. So the leaders are back in full force, as if people have been struggling to find names, the good leaders, and are going always for the same. So we, as I've been saying, Microsoft making new high. So in terms of catalysts, last weekend I've been telling you that there was not that many catalysts. There was the bond auction on Thursday that did the trick for 1%. But when you have a lack of catalysts, you go back into the old market, which is options going back for the old drivers, which are the FANG of this world. So very important for this week. We got on Wednesday the VIX expiry, and on Friday the option expiry. So I'm interested here into the option chain here. It was pretty well flagged, or at least on our community, on your Discord community for the more advanced channel, that there was a lot of call spreads around the 44.50 and 4500. So if you look at the option interest that you have here, so if you look at the 44.50 on the S&P, so this is for this Friday, this coming Friday, you can see the option interest here, 4,500, 3,300, 4,500. So what happened recently is we moved the 4,400 open interest into the 4,450, 4,500. So by definition, when there is a lot of open interest, you get this natural magnet that forces the market to go into this 4,450 to 4,500. So if we don't have external shock, this is probably where we should be going. In terms of drivers, what are the drivers? We got the CPI on Tuesday. Recently, this is here, the S&P didn't care that much about the CPI, as if we do know that this is peak inflation, and the market, the S&P, has not been moving that much. More importantly, we had the retail sales in the US and in China on Wednesday. I'm interested as a trader and portfolio manager into the retail sales for the next 6 weeks, because this is very important in the US and the rest of the world. And we have some names as well. So we got Home Depot in terms of of earnings, Target, we got Walmart. So very much driven by retail for the week. That is important. As I've been saying, I think the US consumer will be struggling going forward. But so far, I haven't seen a strong confirmation. We get an important meeting as well between China and Biden on Wednesday. It's always funny for me because when the macro starts to be a bit of a concern, you start to see actually Europe and in the US saying, okay, we are happy to sit with China again. I will not be surprised that the auction that happened on Thursday was not due to an IT glitch, but actually China saying, look guys, we're not going to be putting bids on any US Treasury auctions unless we start to talk again. So that are one of the drivers. We do have like a bit of earnings, but the earnings season is almost over. I didn't put the weekly straddle, so that should be around the 1.5%. Do your homework. So again, what I'm looking at is, option expiry, what are the different open interest, what are the QQQ, the big names doing versus 80% of the listed companies. That has been the same over and over. If you've been trading on Friday, that has been pretty violent when we went from 43.60, 43.80, 43, 4400, and then we moved another 30 points on not much, and most of the time it is about options. Going forward, after this option expiry, keep in mind that you get Thanksgiving. Thanksgiving is normally very, very quiet. So when you have implied vol at 14%, that is explained a bit by this. So this is it for me for the week. As always, if you got questions, you can reach me by mail. You can join us on the community. If you like what you've been watching today, put a like, put a comment, and I hope to see you soon on the community. Talk to you next week. Bye-bye.